Hey, quick question. Why is no one super concerned that the AI bubble, yes, another market bubble, is similar to, if you remember, if you were around for the housing market, the bubble, the crash of 2008. This is 17 times worse. Moving on. So basically 95% of companies, both Harvard, MIT, and then like a few other sources have reported on this since like a few months ago, but up to 95% of AI tech companies that have invested in AI have not seen a return on investment, which basically means all of the money invested into AI right now is flatlining, and that has basically created this stock market valuation. Like, oh, I'm going to put a random number, we've put 400 billion into AI, so now we're saying our market is up 400 billion. But what's happening is maybe 5 billion, I don't do math, what's 5% of that? Maybe 20 billion, maybe 20 billion has been returned, and then the other 380 billion is actually poof, nothing. And that is exactly how a bubble bursts, is that there's at some point, and I'm not a genius about this stuff, but from one commoner to another, basically when that poof goes poof, so does that $380 billion. And so sometimes these companies are operating and making moves based on money they don't actually have. And then what happens when something like this bursts is those layoffs I was just talking about that some people might be affected by, as if we aren't all already affected by terrible employment. And I don't mean all of us, but there is that fun fact that I said last week that 23% of Americans currently earn about half the livable wage. Anyway, happy Wednesday. Bye.
Most people are waiting for the so-called AI bubble to pop, convinced it will look like every other tech hype cycle we have seen before. They are calm because they think they recognize the pattern, excitement, investment, disappointment, and then a correction. But what if this time it is not a bubble at all? What if what we are watching is something far more dangerous, something that does not burst outward, but collapses inward and pulls everything with it? Stay with me until the end of this video, because if this assessment is even partially correct, the consequences are far larger than most people are prepared to imagine. Before we get into it, make sure you like the video, share it, subscribe to the channel, and click the notification bell and select all so you get every single Angry Guy video the moment we release it. It helps the channel, it helps the message spread, and it keeps you plugged into what is really happening beneath the surface. Also, if you want to learn how to protect and safeguard your assets and grow your wealth in an increasingly unstable world, check out Angry's Crypto Academy. Inside the academy, I break down how to buy, sell, and trade crypto in a clear and practical way, without hype and without nonsense. The link is in the description of this video, so go check it out now and take control of your financial future instead of leaving it in someone else's hands. And if you're enjoying these Angry Guy videos and want to show support, you can buy me a Red Bull using the link in the description. It is a simple way to support the work and keep this content coming. Now, let us talk about what is really happening with artificial intelligence, because the popular framing is dangerously shallow. Everywhere you look, people are using the same language. They call it a bubble. They compare it to the dot-com era. They assume excess will be trimmed, weaker companies will fail, and the survivors will move forward a little wiser. That framing is comforting. It suggests history will repeat itself in a neat and manageable way. The problem is that this situation does not resemble the dot-com era in the ways that actually matter. The dot-com crash was driven by speculation in companies that often had little more than a website and a pitch deck. Capital flowed quickly, but the underlying infrastructure costs were relatively low. When many of those companies failed, the damage was real but contained. Offices closed, stock prices collapsed, and some investors were wiped out, but society itself continued functioning without missing a beat. The internet did not disappear. Electricity did not become scarce. Skilled labor was not permanently displaced on a mass scale. What we are seeing now with AI is fundamentally different. This is not just capital chasing ideas. This is capital being converted into physical reality at a scale that borders on reckless, massive data centers stretching for miles, power generation being redirected, water usage spiking, land being repurposed, entire supply chains bending under the demand for specialized hardware. This is not a bubble made of paper promises. This is a black hole forming out of concrete, silicon, copper, and electricity. Trillions of dollars are being committed not just as investments, but as obligations, long term contracts, guaranteed purchases, locked in supply agreements. Governments are not just encouraging this, they are underwriting it. Public money is flowing into private infrastructure under the assumption that artificial intelligence will produce exponential returns, boost productivity, and secure national competitiveness. The assumption is that failing to invest would be more dangerous than overinvesting. But here is the uncomfortable question that very few people are willing to ask out loud. What if those returns do not materialize? Not partially, not temporarily. What if they never arrive at the scale being promised? OpenAI and similar entities already sit atop obligations that stretch far into the future. These are not hypothetical valuations. These are real costs that must be serviced. Power bills, hardware refresh cycles, data storage, cooling, staffing, maintenance. If even a fraction of those projected revenues fail to appear, the problem is not that a company goes bankrupt. The problem is that entire sectors that reoriented themselves around these assumptions are left exposed. This is where the bubble analogy breaks down completely. When a bubble pops, air escapes and prices fall. When a black hole forms, it pulls in everything nearby, including things that were never directly involved. The AI build out is not isolated, it is tightly coupled to energy markets, semiconductor production, logistics, real estate, water access, and labor planning. A failure here does not stay neatly in one lane. Consider the labor side alone. Over the past few years, companies have made staffing decisions based not on what AI can do today, but on what they believe it will do tomorrow. Entire teams have been cut under the assumption that automation is imminent. Skills that took decades to build are being discarded as if they are obsolete. Experienced workers are pushed out, encouraged to retire, or forced to pivot into unrelated fields. The institutional knowledge walks out the door, and once it is gone, it does not magically return. If AI does not mature fast enough to replace those roles in a meaningful way, companies will not simply rehire the same people. Those people will be gone. Some will have adapted elsewhere. Some will have exited the workforce entirely. The result is not efficiency, it is fragility. Systems that look streamlined on paper, but lack depth, resilience, and human judgment. And now zoom out from companies to countries. Nations are racing to build sovereign AI capacity. Leaders talk about strategic advantage, national security, and economic leadership. Data centers are framed as infrastructure investments, the way highways and ports once were. But highways serve everyone. Ports facilitate trade. Data centers serve models whose value is still speculative. If a country sinks enormous public resources into AI infrastructure and fails to see proportional returns, the loss is not theoretical. That money is gone. It cannot be easily repurposed. A half abandoned data center does not become a hospital or a school. It becomes industrial waste, miles of equipment that depreciates rapidly and costs money just to exist. Meanwhile, other priorities are neglected. Education systems are hollowed out because leaders believe AI will fill the gaps. Workforce development is deprioritized because retraining humans is seen as inefficient compared to training models. Social cohesion erodes as people feel increasingly disposable. Productivity becomes an idol, while people are treated as inputs to be optimized away. This is how you get a decade of regression disguised as progress, not because technology is evil, but because it was used as an excuse to abandon human capital. History shows us repeatedly that when societies undervalue people in favor of abstract efficiency, they eventually lose both. There's also the physical scarcity problem that almost no one wants to talk about honestly. AI at scale is not free. It consumes staggering amounts of resources: high bandwidth memory, advanced CPUs and GPUs, rare materials, reliable electricity, cooling capacity, even land. We are already seeing competition intensify around these inputs. Prices rise, availability tightens, other industries are crowded out. When agriculture land is repurposed for energy infrastructure, food costs rise. When power grids are strained by data centers, households and small businesses pay more. When semiconductor fabs prioritize high margin AI chips, other sectors face delays and shortages. These are not distant hypotheticals. They are already happening in smaller forms, and they compound quickly. The narrative sold to the public is that all of this pain is temporary, that the payoff will justify the cost. But that belief rests on a single assumption: that artificial intelligence will reach a level of capability and reliability that replaces large portions of human labor while creating enough new value to offset the damage done along the way. That is not guaranteed. It is not even proven to be likely on the timelines being used to justify current decisions. Instead of sober assessment, we see something closer to a gold rush mentality. Fear of missing out drives policy. Executives do not want to be the ones who failed to bet big. Politicians do not want to be accused of falling behind. Everyone pushes forward, even as warning signs accumulate, because slowing down feels riskier than speeding up. Hey guys, in a world pushing you to own nothing and be happy, crypto is your key to survival. Join Angry's Crypto Academy to master buying, selling, and trading crypto. Make huge profits and safeguard your wealth. Plus, discover the one crypto virtually no one is talking about, poised to create new millionaires in the upcoming bull run. The link is in the description of the video below. Go check it out now. This is how systems drift into danger without a single villain or conspiracy. Each actor behaves rationally in isolation, but collectively they build something unstable. When the stress test arrives, it does not announce itself politely. It reveals weaknesses all at once. What makes this moment especially dangerous is that it arrives at a time when economic resilience is already thin. Debt levels are high. Trust in institutions is low. Supply chains are fragile. Populations are aging. Social contracts are strained. In such an environment, a massive misallocation of resources is not just inefficient, it is destabilizing. People sense this intuitively, even if they cannot articulate it. That is why there is a growing unease beneath the surface excitement. The glossy presentations promise abundance, but lived experience feels tighter, more constrained, more uncertain. When expectations and reality diverge long enough, confidence breaks. This is not an argument against artificial intelligence as a tool. Used wisely, it can be enormously helpful. It can augment human capability, reduce drudgery, and unlock new forms of creativity. The problem is not the technology. The problem is the story being told about it, a story that frames people as outdated and treats risk as someone else's problem. When leaders talk openly about replacing workers rather than empowering them, they reveal how they see society. When governments subsidize infrastructure without demanding accountability, they reveal who carries the downside. When elites speak casually about disruption, they rarely mean disruption to their own lives. The darkest outcome is not mass unemployment or failed companies. The darkest outcome is a loss of faith. Faith that effort matters. Faith that skills are worth developing. Faith that society values people beyond their immediate output. Once that faith erodes, rebuilding it takes generations. We have seen versions of this before in history, moments where ambition outran wisdom and systems hollowed themselves out, chasing the illusion of control. The lesson is never that innovation should stop. The lesson is that innovation without humility is dangerous. So when people tell you to relax because this is just another bubble, understand what they are really saying. They are assuming that the costs will be contained, that someone else will absorb the losses, and that life will continue mostly unchanged. That assumption is doing a lot of work, and it may not hold. The smarter question is not when the AI bubble will pop, but what happens if the black hole keeps growing? What happens if more money, more labor, and more political capital are pulled in without producing the promised returns? What happens when the bill comes due and there is nothing on the other side but stranded assets and broken systems? To understand how dangerous this moment really is, you have to stop thinking about AI as a product and start thinking about it as a belief system. Right now, artificial intelligence is not being sold merely as software or tools. It is being sold as inevitability, as destiny, as something so powerful and unavoidable that questioning it is framed as ignorance or fear. That framing matters because once something is treated as inevitable, safeguards are dismissed as pointless delays. When leaders say AI will replace large portions of human labor, they are not making a neutral prediction. They are shaping behavior. They are telling companies to plan for a future where people are liabilities rather than assets. They are telling workers that their value has an expiration date. And they are telling governments that investing in people is less important than investing in machines. This belief system creates feedback loops. Companies cut staff early to look forward thinking. Governments subsidize infrastructure to avoid looking behind. Investors pour money in to avoid missing out. Each move reinforces the next, not because outcomes are certain, but because hesitation is punished socially and financially. Once that loop is established, exiting it becomes very difficult. The costs are sunk. The narratives are entrenched. Admitting doubt becomes politically and economically risky. So even when evidence accumulates that the promises are overstated, momentum carries the system forward. This is where the black hole analogy becomes painfully accurate. A black hole does not announce itself with an explosion. It forms quietly as mass accumulates beyond a critical point. At first, everything looks normal. But once that threshold is crossed, escape becomes impossible. The gravity pulls in light itself. We are dangerously close to that threshold with AI investment. The sheer scale of resources being committed means that failure is no longer an option anyone can easily accept. That does not make success more likely, it makes denial more likely. And look at how performance benchmarks are discussed. Every incremental improvement is treated as a breakthrough. Limitations are reframed as temporary glitches. Warnings from insiders are dismissed as negativity. The conversation shifts away from what models cannot do reliably and toward what they might do someday. Meanwhile, the public is encouraged to see AI as both omnipotent and harmless, smart enough to run companies, but safe enough to trust blindly. That contradiction should raise alarms, but instead, it is normalized. The real danger is not that AI systems fail catastrophically overnight. The real danger is that they work just well enough to justify continued investment, but not well enough to deliver transformational value. In that scenario, costs continue to accumulate while returns lag behind expectations. This slow bleed is harder to confront than a sudden crash. Consider the infrastructure life cycle. Data centers do not last forever. Hardware becomes obsolete quickly. Models require constant retraining. Energy demands do not plateau, they scale. Each generation of systems requires more input to achieve marginal gains. That is a treadmill, not a ladder. If productivity gains do not outpace those costs, the math stops working. At that point, organizations face brutal choices. Do they double down, hoping the next iteration finally delivers, or do they pull back and admit that the promised future is not arriving on schedule? History suggests most will double down, at least initially. That is how losses compound. Now, add geopolitical competition to the mix. No major power wants to be seen as falling behind. AI is framed as the next arms race, not necessarily in weapons, but in economic dominance. That framing justifies almost any level of spending. It also discourages cooperation and transparency. When everyone is racing, no one wants to slow down to check the map. Safety concerns become secondary. Ethical considerations become public relations exercises. Long term societal impacts are deferred to future administrations. And this is how you get a world where trillions are spent building systems whose benefits accrue narrowly while the costs are broadly distributed. Energy prices rise for households. Water usage strains communities. Jobs disappear without adequate replacements. And when people ask what they are getting in return, the answers are vague. Another under-discussed risk is the erosion of skills. When automation is introduced thoughtfully, it supports human expertise. When it is introduced recklessly, it replaces practice with dependency. Over time, people stop learning how systems work. They learn only how to interface with them. That is fine until something breaks. Then no one knows how to fix it. We have already seen hints of this in other domains. Over reliance on automation in aviation led to skill degradation among pilots. Over reliance on algorithmic trading amplified market volatility. Over reliance on just in time logistics created brittle supply chains. Each time, efficiency gains came at the cost of resilience. AI threatens to replicate this pattern across nearly every sector simultaneously: medicine, law, engineering, education, governance. When judgment is outsourced, it atrophies. When accountability is diffused, errors multiply. Now, imagine a scenario where companies hollow out their workforces, trusting AI systems to handle complexity. Years later, those systems plateau. They are good, but not good enough. Rebuilding human capacity is not as simple as rehiring. The talent pipeline has dried up. Training programs were cut. Apprenticeships vanished. Institutional memory was lost. This is how societies regress technologically, even as their tools become more advanced. You get powerful systems operated by people who do not fully understand them, in organizations that cannot adapt when conditions change. This is why the idea of an AI driven golden age should be treated with skepticism. Golden ages are built on strong foundations. What we are building now looks more like a house of mirrors, impressive from certain angles, fragile from others. There is also a moral hazard embedded in the current narrative. When leaders believe AI will eventually solve problems, they feel less urgency to address them now. Social inequality, education gaps, healthcare access, these are framed as issues that technology will fix later, so hard choices can be postponed. But technology does not replace governance. It does not substitute for social trust. It does not automatically distribute benefits fairly. Without deliberate design, it amplifies existing power structures. If AI succeeds spectacularly, those who own and control it benefit disproportionately. If it fails, the public absorbs the losses. That asymmetry encourages risk taking at the top and caution fatigue at the bottom. You can see this dynamic already in how layoffs are justified. Decisions are framed as strategic, inevitable, or driven by innovation. Rarely are they framed as choices with human consequences. Workers are told to reskill, adapt, or move on, even as the promised new opportunities remain abstract. This creates a psychological toll that does not show up in economic models: anxiety, disengagement, a sense that effort no longer correlates with stability. When large numbers of people feel this way, social cohesion weakens. Strong societies rely on the belief that participation matters, that contribution is valued, that there is a future worth investing in. Undermine those beliefs long enough and you get withdrawal. People check out, they stop planning, they stop trusting. Like, this is not collapse in the cinematic sense, it is erosion. quiet, persistent, and difficult to reverse. The darkest irony is that many of these outcomes could be avoided with more modest expectations. AI does not need to replace humanity to be useful. It does not need to justify infinite investment to deliver value. But when the bar is set at total transformation, anything less feels like failure. That mindset pushes systems toward extremes, either utopia or disappointment, either revolution or irrelevance. There is very little room left for balance. We are also underestimating the environmental costs. Data centers are often described as clean compared to factories, but clean is relative. The energy demand is enormous. The water usage for cooling is significant. The hardware life cycle produces waste that is difficult to recycle. As climate pressures intensify, these costs will become more politically visible. Communities will ask why their resources are being diverted to serve abstract models while their own needs go unmet. Those questions will not be answered easily. At the same time, the promised efficiency gains are often overstated. AI systems require human oversight. They generate errors that must be caught. They introduce new forms of risk. The net savings are not always what the headlines suggest. Yet the narrative persists because backing away now would require admitting that some decisions were premature. Institutions are notoriously bad at doing that. So, where does this leave individuals? It leaves them in a position where blind optimism is as dangerous as blind fear. The smartest response is neither panic nor denial, it is preparation. Preparation means recognizing that large systems can fail without warning. It means diversifying skills, income, and assets. It means valuing human networks as much as technological ones. It means not outsourcing your entire future to promises made by people who do not bear the consequences. This is why financial self education matters more than ever. When public systems become unstable, individuals who understand how to protect and grow their resources have options. Those who do not are left exposed. It is also why community matters. When trust in large institutions erodes, smaller networks become lifelines. Shared knowledge, mutual support, honest conversations. These are not sentimental ideas, they are survival strategies. None of this requires rejecting technology. It requires rejecting narratives that treat people as expendable. It requires demanding accountability for public spending. It requires asking hard questions before momentum makes them impossible to answer. The future is not predetermined by algorithms, it is shaped by choices. Right now, too many of those choices are being made on autopilot, guided by fear of missing out rather than sober judgment. And if the AI black hole continues to grow unchecked, the damage will not be evenly distributed. Those with leverage will retreat to safety. Those without will bear the weight. That pattern is as old as history. The challenge of this era is not building smarter machines. It is maintaining wise societies while doing so. Wisdom requires restraint. It requires humility. And it requires remembering that systems exist to serve people, not the other way around. That is the lens through which everything happening right now should be viewed, not as a spectacle to be cheered or feared, but as a test of priorities. At this point, ask yourself a simple question. If the promised future arrives late, smaller, or not at all, who pays the price? And who walks away unscathed? That question will guide how you prepare for what comes next. There is another layer to this that most discussions never reach, and that is how narratives shape consent. People do not wake up one morning and agree to radical restructuring of society. Consent is manufactured slowly through repetition, framing, and exhaustion. When AI is constantly described as unstoppable, people stop arguing with it. When job losses are framed as progress, people stop resisting them. When sacrifices are described as necessary for the future, people learn to tolerate the present. This is not new. Every major economic shift has relied on the same pattern. First comes excitement, then inevitability, than normalization. By the time consequences are felt widely, the debate has already moved on. Those who raise concerns are told they are living in the past. The difference now is speed and scale. Previous transitions unfolded over generations. This one is being forced through in a matter of years. Human systems do not adapt that fast without strain. Families do not reorient overnight. Education pipelines cannot pivot instantly. Communities cannot absorb sudden dislocation without friction. When friction appears, it is often misdiagnosed. Rising anxiety is blamed on misinformation. Distrust is blamed on polarization. Withdrawal is blamed on laziness. Rarely is it acknowledged that people are responding rationally to an environment that feels increasingly unstable. If you tell someone that their skills may be obsolete in 5 years, that their job could vanish, and that the solution is constant retraining with no guarantees, do not be surprised if they disengage. Humans are not machines. Motivation depends on a belief that effort leads somewhere meaningful. And this is where the promise of AI quietly undermines the social contract. For decades, the implicit deal was simple: contribute, develop skills, follow the rules, and you will have stability. That deal was imperfect, but it existed. The new message is different: adapt endlessly, compete with machines, accept precarity, and be grateful for access. Access is not ownership. Access is not security. Access can be revoked. This shift matters because societies are held together by shared expectations. When expectations collapse, institutions lose legitimacy. You can already see this in declining trust across nearly every major system: media, government, finance, education. None of this happened in isolation. It happened because promises were broken repeatedly, often in the name of efficiency or innovation. AI is now being layered on top of that erosion. Instead of rebuilding trust, it is being used as a justification for further extraction. More data, more surveillance, more control, always framed as optimization. People sense this even if they cannot articulate it. That is why enthusiasm is mixed with unease. That is why adoption coexists with resentment. That is why jokes about being replaced by algorithms land so close to the bone. Another risk that is rarely discussed openly is concentration. AI development is not evenly distributed. It is dominated by a small number of firms with massive capital requirements. This creates choke points. When essential capabilities are controlled by a few entities, dependency increases. Dependency changes power dynamics. Governments become cautious about regulation. Companies become locked into vendors. Individuals become users rather than participants. Innovation narrows as entry barriers rise. This is not how healthy technological ecosystems function. Healthy ecosystems are diverse. They allow for failure without systemic collapse. They support experimentation at multiple scales. What we are building now looks more like a monoculture: efficient in the short term, vulnerable in the long term. Monocultures fail catastrophically when conditions change. Think about how agriculture learned this lesson the hard way. Single crop dependence led to famine. Diversity was not a luxury, it was resilience. The same principle applies to economies and technologies. Yet the AI race pushes in the opposite direction: standardized models, centralized infrastructure, unified platforms. The argument is efficiency, the cost is fragility. If a major provider stumbles, the ripple effects are enormous. If energy prices spike, costs cascade. If geopolitical tensions disrupt supply chains, hardware shortages intensify. These are not remote possibilities. They are plausible scenarios in a volatile world. At the same time, leaders continue to speak as if the future is smooth and linear, as if progress is guaranteed, as if setbacks will be minor and temporary. That optimism is not grounded in history, it is grounded in hope. Hope is not a strategy. A more honest approach would acknowledge uncertainty. It would invest in people alongside machines. It would preserve human skills even as automation expands. It would slow down where necessary instead of treating speed as virtue. But honesty is hard in competitive environments. No one wants to be the first to admit doubt. No one wants to tell investors that returns may be lower than expected. No one wants to tell voters that sacrifices may not pay off. So the system continues forward, not because everyone believes, but because no one wants to stop. This is where individuals must think independently. Large systems do not protect individuals by default. They optimize for averages, metrics, and appearances. When things go wrong, responsibility diffuses. People are told it was unavoidable. Preparation is not pessimism, it is realism. Realism recognizes that complexity produces surprises. Realism assumes that plans can fail. Realism values optionality. Optionality means having more than one path forward, more than one skill set, more than one income stream, more than one way to participate in the economy. It means not tying your entire future to a single narrative. This is especially important in a world where promises are cheap and accountability is scarce. Another overlooked dimension is time horizon mismatch. AI investments are justified with long term visions, but funded with short term incentives. Executives are rewarded for growth now. Politicians are rewarded for headlines now. Investors seek returns now. The costs, however, unfold over decades. Environmental impact, skill erosion, social fragmentation. These are slow burns. By the time they become undeniable, the decision makers have moved on. This misalignment creates moral hazard. Those who make the bets are not the ones who live with the consequences. That alone should invite skepticism. It also explains why warnings from historians, sociologists, and systems thinkers are often ignored. Their timelines do not fit quarterly reports or election cycles. Instead, attention is given to futurists who promise clean solutions and painless transitions. Their visions are attractive because they remove responsibility from the present. If the future is guaranteed to be better, current harm can be tolerated, but futures are not guaranteed. They are built. If this trajectory continues unchecked, we may look back on this period not as the dawn of a golden age, but as the moment when societies overextended themselves, chasing an illusion. The infrastructure will remain, the debt will remain, the opportunity cost will remain. What will be missing are the people who could have built something more balanced. This is why the phrase black hole is more accurate than bubble. A bubble implies recovery after collapse. A black hole implies irreversible loss. Once resources are pulled past a certain point, they cannot be recovered easily. Time, money, trust, skills, gone. The most painful losses are not financial, they are cultural. When societies lose confidence in their ability to shape their own destiny, stagnation follows. People stop believing that participation matters. They retreat into private worlds. You can already see early signs of this retreat: disengagement from traditional career paths, declining institutional loyalty, increased interest in alternative systems, digital nomadism, parallel economies, decentralized networks. These are not random trends, they are responses. People are not rejecting work or contribution. They are rejecting systems that feel extractive and indifferent. When technology is used to intensify that feeling, resistance grows. This resistance does not always look like protest. Often it looks like withdrawal, quiet quitting, minimal compliance, opting out. From the perspective of elites, this is confusing. Productivity tools are improving. Why is engagement falling? The answer is simple. Tools cannot replace meaning. Meaning comes from being needed, from having agency, from knowing that your role matters. AI narratives that frame humans as temporary obstacles undermine that meaning. No amount of efficiency compensates for that loss. If leaders truly believed in a future where humans thrive alongside machines, their actions would reflect that. They would invest heavily in education. They would protect apprenticeships. They would redesign work to emphasize judgment and creativity. They would slow layoffs and accelerate training. Instead, we see the opposite: cost cutting, de-skilling, short term optimization. That tells you everything you need to know about underlying priorities. And again, this is not about villainizing technology, it is about recognizing how incentives shape outcomes. So, what should be done? At the individual level, awareness is the first step. Do not accept narratives at face value. Ask who benefits, ask who pays, ask what happens if promises fall short. Build skills that are hard to automate, skills that involve judgment, synthesis, and human connection. These do not disappear overnight. Maintain financial resilience. Avoid over-leveraging. Understand how systems work so you are not blindsided by policy changes or market shifts. Stay connected to real communities. Digital networks are useful, but physical relationships matter when systems strain. And perhaps most importantly, retain your sense of agency. Do not internalize the idea that you are obsolete or replaceable. That belief is convenient for those who want compliance. At the collective level, pressure matters, narratives can change, policies can change, but only if enough people demand better questions. The goal is not to stop progress. The goal is to steer it, to insist that human well being is not an afterthought, to reject the idea that productivity alone defines value. We are at a crossroads that will not announce itself with a sign. The path we are on feels normal because it has been normalized. That is why reflection is uncomfortable. It disrupts momentum. But momentum without direction leads nowhere good. As the story continues, the choices made now will echo for decades. Some will lead to resilience, others to regret. The difference lies in whether we remember that technology is a tool, not a destiny, and that people are not obsolete. One of the most revealing signs that something is wrong is how aggressively certainty is being manufactured. In healthy systems, uncertainty is acknowledged and managed. In unhealthy systems, uncertainty is denied and buried under slogans. Right now, anyone who raises fundamental questions about AI timelines, limits, or trade offs is treated as a problem to be managed rather than a voice to be heard. That reaction alone should concern you. When skepticism is discouraged, it usually means stakes are high and confidence is brittle. Real confidence does not fear examination, it welcomes it. What we are seeing instead is a culture that treats doubt as disloyalty and caution as backward thinking. And this is not how strong civilizations make decisions. Strong civilizations debate openly, they stress test assumptions, they allow room for dissent because dissent is how blind spots are revealed. When that process breaks down, mistakes scale quickly. And another warning sign is how language is being softened. Terms like efficiency, optimization, and transformation are used to describe outcomes that would once have been called disruption, displacement, or loss. Words matter because they shape perception. When harsh realities are wrapped in clean language, people feel the impact before they understand the cause. This creates confusion and fatigue. People know something is off, but they are told it is progress. That dissonance erodes trust. Trust is one of the most undervalued assets in any system. It takes years to build and moments to destroy. Once lost, it is extraordinarily difficult to rebuild, especially at scale. AI narratives that overpromise and underdeliver risk burning trust, not just in technology, but in institutions themselves. That matters because institutions coordinate large groups of people. When trust collapses, coordination fails. People retreat to smaller units, families, local networks, online communities, parallel systems emerge. From one angle, this looks like decentralization and empowerment. From another, it looks like fragmentation. Both can be true at the same time. The danger is not decentralization itself. The danger is unmanaged fragmentation. When shared frameworks disappear without replacement, societies lose the ability to act collectively. Every crisis becomes harder to address because there is no common ground. AI is being introduced into this already fragile environment. Instead of stabilizing it, current approaches risk accelerating fragmentation. Benefits flow upward and outward, costs flow downward and inward. That imbalance fuels resentment. Resentment does not always explode, often it simmers. It shows up as cynicism, as disengagement, as quiet refusal to participate fully. This is where many leaders miscalculate. They assume people will continue contributing even if the system feels unfair, because people always have. That assumption ignores history. When enough people feel exploited or irrelevant, systems slow down. Productivity drops, innovation stagnates, compliance becomes minimal. No algorithm fixes that. There's also a deeper philosophical issue at play, one that rarely makes it into policy discussions. It is the question of what kind of society we are trying to build: a society organized around human flourishing, or a society organized around output metrics. These two visions overlap, but they are not identical. A society optimized purely for output treats people as variables. A society focused on flourishing treats output as a means, not an end. AI fits more comfortably into the first vision than the second. That does not mean it cannot serve human flourishing. It means it must be guided intentionally. Without that guidance, incentives push toward exploitation. Right now, guidance is weak because responsibility is diffuse. No single actor controls the system. Everyone participates. Everyone benefits a little. Everyone risks a lot. This diffusion makes accountability almost impossible. When things go wrong, blame is shared, which often means no one is held responsible. That is why individual awareness becomes so important. You cannot rely on systems to protect you if they are designed to optimize themselves rather than you. Understanding this does not require paranoia, it requires literacy, economic literacy, technological literacy, historical literacy. These are not abstract academic concepts, they are survival skills in complex societies. History is especially instructive here. Civilizations rarely collapse because of a single invention. They collapse because of cumulative misjudgments compounded by overconfidence. They invest heavily in solutions that solve yesterday's problems while ignoring emerging weaknesses. The Roman Empire did not fall because of one battle. It fell because its systems became brittle, its economy hollowed out, its leadership lost legitimacy, its citizens lost faith that participation mattered. Technology did not save it, nor did it doom it. Choices did. Our era is different in scale, but similar in pattern. Global systems are more interconnected than ever. That increases efficiency, but it also increases risk. Failures propagate faster. Mistakes spread wider. AI amplifies this dynamic. When a system built on flawed assumptions scales globally, the consequences are global. That is why humility matters so much right now. Humility acknowledges that intelligence, whether human or artificial, has limits. It accepts that complexity cannot be fully controlled. It values redundancy over elegance. Redundancy is often criticized as inefficiency, but redundancy is what keeps systems alive under stress. Backup plans, human oversight, diverse approaches, these are not waste, they are insurance. The current AI push often treats redundancy as a problem to be eliminated. Humans are framed as expensive backups. Manual processes are framed as legacy burdens. This mindset strips systems of resilience. When everything works, it looks brilliant. When something breaks, there is nothing left to catch the fall. You can already see this thinking in how companies talk about automation. The goal is not assistance, the goal is replacement. That distinction is crucial. Assistance preserves human agency, replacement erodes it. Societies that erode agency eventually face pushback. People want to matter. They want to be needed. They want their efforts to count. When systems deny that, people seek meaning elsewhere. Sometimes they find it in constructive ways. Sometimes they do not. Another aspect that deserves attention is how AI reshapes incentives around truth. Models generate plausible outputs, not necessarily correct ones. As these outputs flood the information ecosystem, the signal to noise ratio degrades. Verifying information becomes harder. Authority becomes blurred. Confidence is mistaken for accuracy. This environment rewards those who speak loudly and frequently, not those who are careful. That shift has consequences for public discourse. Nuance disappears. Polarization increases. Trust erodes further. AI did not invent these trends, but it accelerates them. When combined with economic insecurity and institutional distrust, the result is a volatile mix. People become more susceptible to narratives that offer certainty and blame. That is not a healthy foundation for decision making. This is why slowing down matters. Not stopping, slowing. Slowing allows time for assessment, for adjustment, for course correction. It allows space to ask whether investments align with values, whether progress serves people or bypasses them. But slowing down requires courage. It requires leaders willing to risk criticism. It requires investors willing to accept lower short term returns. It requires citizens willing to demand better questions rather than ones that are easy answers. At the moment, courage is in short supply. Speed is rewarded. Doubt is punished. That imbalance will not resolve itself. So, again, the responsibility shifts downward to individuals, to communities, to those willing to think ahead rather than react. That does not mean withdrawing from the world. It means engaging with eyes open, participating without surrendering agency. The future will be shaped not just by what technologies are built, but by how people respond to them. Passive acceptance leads to one outcome. Active engagement leads to another. This is the crossroads we are standing at now, even if it does not feel dramatic. Most crossroads do not. The danger is assuming there will be a clear moment later when decisions can be revisited. Often there is not. Momentum closes options quietly. By the time consequences are undeniable, paths have narrowed. That is why reflection now matters more than reaction later. As we move forward in this discussion, the question becomes less about whether AI will succeed or fail, and more about whether societies will retain enough agency to adapt if it does not deliver as promised. Because adaptability is what separates resilience from collapse. And adaptability begins with honesty. Honesty, however, is expensive in systems built on momentum. Once expectations are set, they become obligations. Once visions are sold, they become promises. Walking those promises back feels like failure, even when adjustment would be the responsible move. This is why overcommitment is such a recurring theme in large scale collapses. Leaders do not fall because they lacked intelligence. They fall because they could not reverse course without admitting error. AI sits squarely in this danger zone. Too much has already been promised. Too much prestige is attached to success. Too many careers are riding on the outcome. This creates a bias toward optimism that is difficult to counteract, even with evidence. That bias is reinforced by selective visibility. Success stories are amplified. Failures are quietly absorbed or reframed. Pilots that do not work are labeled experiments. Layoffs are framed as restructuring. Delays are reframed as refinement. Over time, this creates an illusion of steady progress, even when underlying gains are modest. Meanwhile, the costs remain very real. Capital is locked up, energy demand climbs, human capacity erodes. These costs are harder to spin, so they are often externalized, passed to consumers, passed to workers, passed to future generations. This pattern is familiar. It is how debt accumulates, not just financial debt, but social and institutional debt. Obligations deferred, maintenance postponed, trust borrowed against the future. Eventually, that debt must be paid. The question is not if, but how and by whom. One reason the AI conversation feels so distorted is that it collapses multiple timelines into one. Short term capabilities are conflated with long term visions. Narrow tools are discussed as precursors to general intelligence. Incremental improvements are extrapolated into inevitabilities. This is not analysis, it is storytelling. And while storytelling can inspire, it can also mislead. Good planning distinguishes between what is possible now, what is plausible later, and what is speculative. Current narratives blur these distinctions because clarity would slow investment. Slowing investment is treated as a threat, but unexamined acceleration is often more dangerous. Another underappreciated risk is how quickly institutional memory fades. As turnover increases and automation expands, fewer people remain who understand why systems were designed the way they were. Context disappears. Decisions are made based on surface metrics rather than deep understanding. This makes systems brittle. When unexpected situations arise, responses are improvised rather than informed. Mistakes compound. AI systems trained on historical data inherit this problem. They capture patterns, not context. They reproduce outputs without understanding underlying reasons. When the environment shifts, their reliability degrades. Humans compensate for this naturally through judgment and experience. Remove too much of that human layer, and errors propagate silently. This is especially concerning in domains where stakes are high. Healthcare, infrastructure, finance, governance. These are not areas where plausible output is sufficient. Accuracy, accountability, and moral judgment matter. Yet the pressure to automate pushes in that direction anyway, because automation looks clean on spreadsheets. Another issue rarely addressed is recovery. What happens after failure? Systems built around AI often lack clear rollback plans. When a process is fully automated, reverting to manual operation is not trivial. Skills have atrophied, processes have changed, documentation is outdated. Like, this creates a trap. Even when systems underperform, organizations stick with them because alternatives no longer exist. The cost of reversal feels higher than the cost of persistence. This is how suboptimal systems become permanent. At the societal level, this dynamic is dangerous. It reduces flexibility. It narrows future choices. It locks in decisions made under uncertainty. All of this unfolds while public discourse remains focused on surface debates. Jobs gained versus jobs lost. Regulation versus innovation. These are important questions, but they miss the deeper issue of trajectory. Trajectory matters more than snapshots. A system can look functional while moving in the wrong direction. By the time problems are visible, momentum makes correction difficult. That is why early warnings are so often dismissed. They are inconvenient, they disrupt confidence, they challenge authority. But ignoring warnings does not make risk disappear, it just postpones reckoning. The uncomfortable truth is that no one fully understands how this will play out. Anyone who claims certainty is either selling something or protecting something. In complex systems, humility is the most rational posture. Yet humility is rare in environments driven by competition and ego. This is where cultural narratives play a powerful role. Societies that glorify disruption and speed tend to undervalue stewardship and care. They celebrate builders, but forget maintainers. They reward visionaries but neglect guardians. AI fits neatly into this cultural bias. It is framed as bold and futuristic. Those who question its impact are framed as cautious or resistant. The balance is off, and healthy societies need both builders and maintainers, innovators and stewards, speed and patience. When one side dominates, imbalance follows. Another consequence of the current trajectory is the narrowing of imagination. Paradoxically, as AI generates endless content and options, the range of futures seriously considered shrinks. Everything converges on a single vision of progress driven by automation and efficiency. Alternative paths are crowded out. Human centered models, slower growth models, community oriented economies, these are dismissed as unrealistic or nostalgic. But diversity of vision is how societies adapt. When everyone pursues the same goal, failure becomes systemic. This is why monoculture thinking is so dangerous. It creates blind spots that no amount of intelligence can overcome. As AI becomes embedded deeper into decision making, the risk is not that it becomes too powerful, but that it becomes too central. When one tool dominates, its limitations shape outcomes everywhere. This centralization also affects accountability. When decisions are mediated by systems, responsibility blurs. Was it the model, the data, the operator, the policy? No one is clearly at fault, so no one is clearly responsible. This ambiguity erodes trust further. People want to know who answers when things go wrong. When no one does, resentment grows. You can already see this dynamic in automated systems people interact with daily: customer service, credit decisions, content moderation. Appeals disappear into opaque processes. Frustration builds. Scale that frustration across entire societies, and you get instability. Again, this is not about rejecting tools, it is about governance. Tools without governance amplify power imbalances. Governance, however, requires legitimacy, and legitimacy requires trust. Trust cannot be engineered. It is earned through transparency, accountability, and alignment with shared values. Right now, AI deployment often undermines those elements. Decisions are made behind closed doors, impacts are felt unevenly, benefits are concentrated. That is not a recipe for long term stability. So, what does a more resilient approach look like? It starts with reframing success. Instead of asking how much can be automated, ask what should be automated. Instead of asking how fast systems can scale, ask how gracefully they can fail. Design for failure is not pessimism, it is realism. Every complex system fails eventually. The question is whether failure is catastrophic or manageable. Resilient systems degrade gradually. They provide warning signs, they allow intervention, fragile systems collapse suddenly. AI heavy architectures often lean toward fragility because they aim for maximal efficiency. Efficiency is valuable, but it is not the only value. Redundancy, adaptability, and human judgment are equally important. At the personal level, this insight changes how you navigate the world. It encourages skepticism of single point solutions. It encourages diversification. It encourages continuous learning without dependency. It also encourages patience. Not every trend needs to be chased. Not every promise needs to be believed. Not every tool needs to be adopted immediately. Being early is only valuable if the direction is right. At the societal level, this insight calls for a recalibration of priorities. Education that emphasizes critical thinking rather than rote output. Economic models that reward contribution rather than extraction. Technologies that augment rather than erase human roles. These shifts are possible. They are not utopian, but they require intention. Without intention, default incentives take over, and default incentives in our current system favor concentration, speed, and short term gain. That path has been walked before. It rarely ends well. The uncomfortable reality is that many of the people driving the current AI push will not be around to deal with the long term consequences. They will have moved on, retired, cashed out, written memoirs. The consequences will be inherited by those who had little say in the decisions. That imbalance should inform how much trust you place in the promises being made. It should also motivate engagement rather than apathy. Disengagement seeds control. Engagement, even imperfect, creates pressure, and history is shaped not just by leaders, but by the limits imposed on them. As this discussion moves toward its later stages, the central theme becomes clear. The question is not whether AI is powerful, it is whether societies are wise enough to integrate it without losing themselves. Power without wisdom is dangerous. Wisdom without power is fragile. Balance is the challenge, and that balance will not be found in hype cycles or investment decks. It will be found in how people choose to value themselves and each other in the face of automation. And that choice is still open, but not indefinitely. At some point, every era is forced to confront the gap between what it promised and what it delivered. That moment does not arrive with sirens or headlines. It arrives quietly, when excuses stop working and outcomes can no longer be explained away. We are approaching that moment with artificial intelligence, not because the technology is useless, but because the expectations attached to it have grown far beyond what any system can realistically sustain. The most dangerous lies are not told outright, they are implied. They live in assumptions that go unchallenged. The assumption that progress is automatic, the assumption that scale equals success, the assumption that people are interchangeable parts. These ideas seep into policy, into business decisions, into cultural norms until they feel natural. By the time they are questioned, damage has already been done. Shout out to the 1 hour gang. Shout out to the 1 hour gang. What makes this moment different from past technological shifts is not just the speed or the capital involved, it is the willingness to gamble with foundational structures while dismissing the human cost as temporary friction. That gamble is being made across industries and across governments at the same time. When bets are this synchronized, failure is not isolated, it is systemic. If AI delivers everything promised, societies will still have to reckon with the way the transition was handled, with who benefited and who paid, with how many people were discarded along the way. Progress that leaves scars does not automatically heal them. If AI fails to deliver at scale, the reckoning is harsher. Trillions in sunk costs, abandoned infrastructure, hollowed out workforces, a generation trained for roles that never stabilized. Public trust stretched past its breaking point. In that scenario, the damage is not just economic, it is civilizational. That is why framing this as a simple bubble misses the point entirely. Bubbles deflate and markets recover. What we are dealing with is a structural shift that can weaken societies for decades if handled poorly. A black hole does not burst and release energy back into the system, it absorbs and erases. This does not mean collapse is inevitable. It means outcomes are contingent on choices being made right now. Choices about restraint, about balance, about remembering that technology is meant to serve people, not render them obsolete. History does not punish innovation, it punishes arrogance. It punishes the belief that complexity can be mastered through force and speed alone. Every civilization that forgot this lesson paid for it in decline, stagnation, or fragmentation. The quiet danger of this moment is that it feels normal. New tools always arrive with excitement. Investment always feels justified in the moment. Sacrifices are always easier to rationalize when benefits are promised tomorrow. But tomorrow has a way of slipping further away when accountability is absent. For individuals watching this unfold, the response should not be despair. It should be awareness. Awareness that systems do not care about you by default. Awareness that resilience is personal before it is collective. Awareness that the safest position in times of transition is not blind optimism, but informed adaptability. That means protecting your financial independence. It means refusing to tie your identity to roles that others openly plan to automate away. It means building skills that involve judgment, synthesis, and human connection. It means understanding how power flows through systems so you are not surprised when rules change. It also means resisting the subtle psychological pressure to, to see yourself as replaceable. That idea is useful to institutions, but corrosive to individuals. Societies do not thrive when people internalize disposability. They thrive when people believe their participation matters. And at a collective level, it means demanding better questions. Not whether AI is impressive, but whether it is being deployed wisely. Not how fast it can scale, but how safely it can fail. Not how many jobs it can replace, but how many lives it can meaningfully improve. These are not anti technology questions, they are pro civilization questions. The future will not be decided by algorithms alone. It will be decided by what people tolerate, what they normalize, and what they refuse to accept. Momentum can carry systems a long way, but it cannot protect them from reality indefinitely. There is still time to choose restraint over excess, stewardship over exploitation, and people over projections. That window does not stay open forever, but it is not closed yet. The purpose of this conversation is not to predict doom. It is to strip away comforting illusions so better decisions can be made. Comfort delays action, clarity enables it. So now I want to hear from you. What did you think about what we discussed? Do you agree with this assessment, or do you see the situation differently? Leave a comment and share your thoughts, because these conversations shape how people think, and how people think shapes what comes next. Like the video if you like it. Don't forget to subscribe. And if you like the video, share the video. And just remember that all roads lead to MWA, men walking away, and cheers.
Nothing says you care like crypto. Nothing can compare. Nothing says you care like crypto. Oh, nothing can compare to crypto.